Hello ladies and gentlemen, welcome to Cash Crafting Crew, your favorite finance YouTube channel. Today, rug pull, crypto scams. Have you ever wondered why so many people lose money in the crypto market? Welcome to the cryptic world of cryptocurrencies, a digital frontier that's as exciting as it is unpredictable. This is a realm where virtual coins can be mined, traded, and invested in, all without a physical presence. Yet it's not all glittering gold here. The volatile nature of cryptocurrencies means that fortunes can be made and lost in the blink of an eye. It's a high-stakes game of risk and reward, where the potential for astronomical gains is equally matched by the peril of devastating losses. And then there's another facet to this world, the dark underbelly that many overlook: scams. Yes, the crypto world, for all its promise and potential, is riddled with scams that prey on the uninformed and the unprepared. So, are you ready to delve deeper? The crypto world is full of opportunities, but it's also riddled with scams. Let's delve deeper. You may have heard of the term rug pull, but do you know what it really means? Picture this. You've just invested in a promising new cryptocurrency. It's all sunshine and rainbows, until one day the developers pull the proverbial rug from under your feet. You're left standing, bewildered, with tokens that are as good as monopoly money. Welcome to the world of rug pulls. This term, borrowed from the world of magic tricks and illusion, aptly describes a fraudulent activity that is becoming increasingly common in the crypto realm. In essence, a rug pull involves the sudden withdrawal of liquidity by project developers or founders. Imagine a bustling marketplace where buyers and sellers exchange goods. Now picture a scenario where the market owner decides to shut down without warning, leaving traders with their goods, but no place to sell them. That's a rug pull in the crypto world. But how does it all happen? Well, the mechanics are simple yet sinister. Developers or founders of a cryptocurrency project create tokens and list them on a decentralized exchange. They provide liquidity for the token, attracting investors. Everything seems hunky-dory until the developers decide to withdraw all the liquidity, often making off with a hefty amount of money. The investors, on the other hand, are left holding tokens that have little to no value. Since the liquidity pool is gone, they can't sell their tokens, and their investment essentially becomes worthless. This sudden, unexpected action is akin to a magic trick, where the magician pulls a rug from under the audience, leaving them surprised and, in this case, significantly poorer. It's important to note that rug pulls are not just unethical, they're illegal. They are a form of fraud, a deception designed to rob unsuspecting investors of their hard-earned money. While the crypto world offers numerous opportunities for growth and profit, it also harbors its fair share of risks and pitfalls. Rug pulls are the crypto equivalent of a con game, leaving investors high and dry. Remember, in the world of crypto, not everything that glitters is gold. Crypto scams are not limited to rug pulls. They come in different shapes and sizes. Let's dive deeper into the dark underbelly of the crypto world. First, we have Ponzi schemes, the oldest trick in the book, now repackaged for the digital age. Named after the notorious fraudster Charles Ponzi, these schemes work by using funds from new investors to pay returns to earlier investors, creating the illusion of a profitable investment. In the world of crypto, these schemes often promise high returns with little to no risk, and use aggressive marketing tactics to draw in as many unsuspecting investors as possible. Then there are fake initial coin offerings, or ICOs. An ICO is like an IPO in the stock market, but for cryptocurrencies. It's a way for crypto startups to raise funds by selling their own unique digital tokens to investors. Fake ICOs, however, are a sham. They create an illusion of a promising new cryptocurrency, complete with a glossy white paper and a professional-looking website, only to disappear with the investor's money once the ICO is over. Lastly, we have phishing attacks. These are scams where fraudsters trick you into giving them your sensitive information, like your crypto wallet password or private keys. They do this by disguising themselves as a trustworthy entity, like a crypto exchange or wallet service. It's like a wolf in sheep's clothing. The impact of these scams on investors can be devastating. They can lose their hard-earned money, their trust in the crypto market can be shattered, and in some cases they may even face legal consequences. Understanding these scams is the first step to protect yourself from them. Remember, knowledge is power, and in the volatile world of crypto, it could mean the difference between making a fortune and losing it all. Just like in the real world, if something seems too good to be true in the crypto world, it probably is. So how can you protect yourself from falling prey to these scams? This is the question that we should always ask ourselves when dealing with the cryptic world of cryptocurrencies. Spotting the red flags is an essential skill that everyone should have in their arsenal. Let's delve into this a bit further. One glaring red flag is the promise of guaranteed returns. In the world of investments, nothing is certain. Markets fluctuate, prices rise and fall. If someone is promising you a fixed return on your investment, be wary. This is a common tactic used by scammers to lure unsuspecting victims. Next up, we have anonymous developers. In a legitimate project, the developers are proud to associate their names with their work. They have nothing to hide. On the other hand, if the developers choose to remain anonymous, it could indicate that they are not ready to take responsibility for their project. They might disappear, leaving investors high and dry. Lack of transparency is another red flag. Legitimate projects have clear, accessible information about their plans, their technology, and their progress. They keep their investors updated. If this information is not readily available, or if it seems vague or confusing, it might be a sign of a scam. Now let's talk about the importance of doing thorough research before investing. Researching a project can help you understand its potential and risks. It can also help you identify any red flags. Look at the project's white paper, check the developer's credentials, and read reviews and discussions about the project. If something seems off, it probably is. It's also important to check if the project is listed on reputable cryptocurrency exchanges. These exchanges do their own vetting and are less likely to list scam projects. Be cautious of projects that are only listed on obscure or unknown exchanges. Above all, trust your instincts. If something seems too good to be true, it probably is. Be skeptical, ask questions. Don't let greed cloud your judgment. Remember, knowledge is your best defense against scams. Empower yourself with information, stay vigilant, and you can navigate the crypto world safely. Prevention is better than cure, especially when it comes to your hard-earned money. The world of cryptocurrencies is no different. It's a financial frontier with its own unique risks. But with a few practical tips, you can safeguard your crypto investments and navigate this digital landscape with confidence. Firstly, always use secure and reputable wallets. Cryptocurrency wallets are akin to a digital bank account, and just like your physical wallet, its security is paramount. Opt for hardware wallets if you're dealing with large amounts of cryptocurrency, as these provide an extra layer of security. They store your private keys offline, making them immune to online threats. Secondly, enable two-factor authentication, often referred to as 2FA. This adds an additional layer of security by requiring two forms of identification before accessing your account. It could be a password and a code sent to your mobile device, or a password and a fingerprint. This ensures that even if a malicious actor gets hold of your password, they won't be able to access your account without the second factor. Thirdly, stay updated about recent scams. Knowledge is power, and in the crypto world, it's your best defense. Keep an eye on news outlets and crypto communities. They often share information about recent scams, helping you stay one step ahead of potential threats. Lastly, always do your own research. Don't invest based on hype or promises of quick returns. Understand the project, its team, and its roadmap. A thorough understanding can help you spot inconsistencies and red flags that could indicate a scam. Remember, in the world of cryptocurrencies, the security of your investments largely depends on your actions. So it's essential to be proactive about your security rather than reactive. In conclusion, safeguarding your crypto investments isn't rocket science. It's about being cautious, vigilant, and informed. It's about using secure wallets, enabling two-factor authentication, staying updated about scams, and doing your own research. Being cautious and vigilant can go a long way in protecting your investments. Let's quickly recap what we've learned today. We've embarked on a journey to unravel the mysteries of the cryptic crypto world, shedding light on the obscure phenomenon known as a rug pull. It's a deceptive practice where developers abandon a project and run off with investors' funds, leaving them high and dry. We've dissected the anatomy of a crypto scam, highlighting its insidious nature. These scams are often intricately designed, luring unsuspecting investors with promises of high returns. We've learned that just as in the traditional financial world, if something seems too good to be true, in the crypto world, it probably is. We've also explored the telltale signs of a potential scam. The red flags may range from anonymous developers, lack of transparency, to unrealistic promises of returns. Remember, these warning signs are there to alert us, and we should never ignore them. And finally, we've discussed how to safeguard your crypto investments. It's crucial to conduct thorough research before investing, to understand the project's fundamentals, the team behind it, and its long-term viability. Always diversify your portfolio and never invest more than you can afford to lose. The crypto world is a vast and complex universe with its own set of rules and risks, but it also offers unprecedented opportunities for growth and innovation. The key to navigating this world is information. The more knowledgeable we are, the better equipped we'll be to make informed decisions and protect ourselves from scams. In this ever-evolving crypto landscape, staying informed and vigilant is not just an option, it's a necessity. It's not enough to ride the wave of crypto hype. We must also be aware of the potential pitfalls and take proactive steps to safeguard our investments. In the world of crypto, the only surefire way to avoid scams is to stay informed and be vigilant. Remember, it's your money on the line. We hope you liked the video. If so, it would help us a lot if you left us a comment, since the YouTube neural network values this very much and thus recommends our videos to more people. Give it a like and activate the bell so that you receive a notification when we